Hey guys, we wanted to talk to you today a little bit about what's been making news this last week about the LLPA adjustment. That stands for Loan Level Pricing Adjustment. So what happens on a Fannie Mae or Freddie Mac loan, your standard conventional loan, there are pricing adjustments that are built into the individual rate. So what happened is some people with screws loose in the Biden administration thought it would be some great idea to mix up how those are calculated and applied on loans. And yes, the headlines are almost as ridiculous as the truth is.
Yeah.
And if you have a lower credit score, you actually can qualify for a better rate. A higher credit score with a traditional, 10, 15, 20% down payment, you will actually get a worse rate offering than someone with a lower credit score and a lower down payment. I don't make the rules. I'm just here to report the news. And I tell you what, whoever is running business decisions is making a very poor one because, we normally do, I don't know, how many files a month or what percentage would you think where we do credit repair? Because we like to do credit repair for our clients. If I come in and my client's got a 669 FICO score, I'm going to see what I can do to try to get their score above 700. Now it's like it's losing that incentive.
Yeah, and then on top of that, they compounded that with the loan level pricing adjustments for people who are putting anywhere from obviously 3, 5, 10, 15, and even 20% down across the board, regardless of your credit score. That loan level pricing adjustment got worse. A lot of things that right now, when people who are wanting to purchase a home, there's a lot of pain there, right? Closing costs are up, rates are up, payments are up, prices are still up in a lot of places. And so to make a move like this, where you're not alleviating any pain, you're creating more, doesn't make a whole lot of sense to me. But obviously there's some call them political or call them whatever you want to call them, but there's some other reasons they're doing that. But credit score wise, like you said, obviously whenever someone's at that 659 or 679 or when they're right up against that next tier, we're always trying to push people up. And now it may not make as much sense. We're really going to have to pay attention to those LLPAs and make sure that's the right move for them.
Yeah, the thing to keep in mind, though, that if you're putting less than 20% down, you still have mortgage insurance on the loan. So the mortgage insurance companies have not made some magical adjustment. And so one area where we really see a significant difference in the actual overall monthly payment or the cost of your loan is the mortgage insurance premium. So if you have a lower credit score, that mortgage insurance premium is going to be higher. So, I've heard people saying like, I'm going to skip a payment on my credit card before I buy a mortgage. It's like, please don't do that.
Yeah.
We still need to optimize our credit. This, Banana Republic, this clown world that we're living in right now probably won't last forever. Credit does still matter. So don't get too crazy, but it's a pretty crazy policy. As far as from a lender and a real estate person's perspective, if you read any of those articles, the National Association of Mortgage Bankers or the National Association of Real Estate Agents, they lit up the FHA department.
Yeah, they did.
It's just so absurd. So anyway, don't let it stop you from buying a house, but it's just pretty crazy. It's bananas.
Yeah. The great thing, though, right now especially, this announcement, it's a great headline. Obviously, we want to explain it, educate people on exactly what it is. But truth be told, with what FHA did in reducing their mortgage insurance premiums just a month or two ago, maybe it was 2 months ago, if you're sub 700, FHA is probably going to be your best bet no matter what. Unless there's some other reason why we need to go conventional. FHA is probably going to price out better because of that mortgage insurance, the adjustments that are still happening on those lower credit scores.
So specifically for those of you who are watching, the FHA mortgage insurance premium was recently dropped from 0.85% to 0.55%. So that was a significant drop. And on top of that, interest rates are typically a little bit lower on an FHA. And this last year, the FHA loan limits increased dramatically. So in Utah specifically, Salt Lake County, I believe, is at 660,000.
It's crazy.
Or 600, yeah, and then Utah County's like 609,000. So still over 600,000. And then here in Maricopa County in Arizona, it's
530 something.
Yeah, it's still pretty dang high. So you can, I mean, traditionally it's like 300,000 for an FHA loan, but now, I mean, with these higher loan amounts, you could do a 3.5% down payment and have a pretty solid rate loan. So
so
that might be worth looking at.
Awesome stuff. I love it. Love that we get to share it with you guys. If you've got questions, hit us up, Instagram, wherever you find us.
Love it. Good luck out there.
Thanks.
Clap that. Clap it off.
That's a walk off.
Did you like where I went with that?
Yeah, I liked
I
it.
totally freaking jacked up the loan limits.